Thank you for our speakers. The next panel is for the shaping fintech regulations and lessons from Sandbox. I would love to welcome Gila Inovic, right? That's a difficult name. She's from Biskovic, sorry. She's the head of partnerships and fintech and regfit in the start. Punchback, please. It's hard. It's long names. Thank you so much.
Thank you. Gents, why don't you join me? We'll do this together. Thank you. My name is Gela Boshkovic. I know it's a mouthful. I am head of FinTech and RegTech for Startup Bootcamp. You may have heard of the Accelerator program. I spend most of my time locked in a dungeon, designing pilots, POCs, with banks and fintechs. And I work actively with several regulators and have done some projects with regulators, including one of them, ADGM, who's here today. As well as the FCA and the Monetary Authority of Singapore. So my background is actually regulatory economics, and I have a soft spot for regulation. As you can see, everyone's leaving because regulation doesn't seem that attractive or sexy. Well, regulation is absolutely one of the most, and I'm going to be controversial here, sexy things out there in fintech. And I would love to have my panel introduce each of themselves as we go down the line, because I can do them no justice, although we're going to try to actually level set a few things and some misunderstandings of what regulation actually serves, what purpose it serves in this market, why it's so crucial, and some of the initiatives that they're fostering that allows us to actually be innovative. The thesis today being regulation does drive innovation. So, Nick, do you want to kick us off?
Great. Can everybody hear me okay? Good, good. So let me introduce myself. We're going to do introductions first of all.
Down the line.
Perfect. Okay, so let me introduce myself first of all. Good afternoon, everybody. My name's Nick Lee, as the picture says up there. I'm Director of Authorization at the Financial Services Regulatory Authority within Abu Dhabi Global Market. Abu Dhabi Global Market, relatively new international financial centre in the UAE's capital. Just a quick synopsis of me. I've been at ADGM for about a year and a half now. Prior to that, I worked at the Bank of England in the UK. I led the team who were responsible for removing the barriers to entry in the banking sector in the UK. So it was really interesting to hear that last discussion on barriers to entry. And look forward to the panel discussion today.
Thank you, Nick. Faisal?
Can you hear me? Great. My name is Faisal Al-Juwaidi. Assalamu alaikum jami'an. My name is Faisal Al-Juwaidi. I'm the advisor to the Deputy Governor of Banking Operations. I'm also handling Sandbox at SAMA.
Thank you. Ken? And I think we have an extra microphone if this is easier.
Yeah, that'll be easier. I'm Ken Coghill with the Dubai Financial Services Authority. I head up our operational and technology risk supervision team. And within that team sits our FinTech program and our cybersecurity risk supervision program. And quick background on myself, I started out as an equity derivatives trader in Chicago in the US, and then moved into market manipulation investigations, then moved to Dubai and became a banking supervisor, and then from banking supervision to now running the FinTech program and a cybersecurity risk supervisor.
Thank you. I think we need to start level setting a few things, because although the buzz of a sandbox has been quite the hot thing for the last 2 years, there are very few people that actually understand what a sandbox is. And I would like to make sure that we have that clarity, because we're going to be talking about the utility of the sandbox, but we're also going to be talking about what comes next and the lessons that we've learned from doing this. So we'll actually just go down the line. How does ADGM see sandboxing?
Yeah, thanks. So we've had a really so first of all, what is a sandbox? I guess is probably the first question that's worth we should answer first of all. So certainly from our perspective, a sandbox is a place where new entrants or existing firms that are regulated by us can come and test out new ideas, new technology, new innovation in effectively a safe place, in a safe regulatory place, that they will know that they have a safe harbor, that they won't be breaching any rules, they don't need full authorization. So it should be relatively simple to enter and relatively low cost to enter. It is also useful, whilst it's useful for those innovators or existing firms who want to test innovation, it's also incredibly useful for regulators and supervisors as well, because regulators and supervisors get to understand how this new technology works, how some of these new ideas can help shape the regulation of the future. And that's one of the things that we're really keen on in ADGM. So we've got a really busy sandbox. We call it to be a little bit different, we call it a reg lab in ADGM. We've got 26 firms in our reg lab now, a whole range of different activities that are being tested and undertaken, from things like remittance to financial inclusion, to enhancing credit provision for SMEs, to security tokens and crypto assets and other things like that. Whole range of different things, and also from fintechs from around the world. So we have fintechs, we have Halala, who are here today, obviously sponsoring the event. In Saudi Arabia, we have UAE fintechs, we have fintechs from Hong Kong, Singapore, UK, US, and Canada as well. So real diverse range of fintechs. And for us, it's been incredibly successful. We're on our third cohort now. We will have a fourth cohort later on in 2019. And we will aim probably to focus that on a particular area or sector where we haven't necessarily seen a huge amount of innovation so far. So a good example of that would be, we only have one fintech that focuses on insurance in our sandbox at the moment, and we're very keen to grow an insurtech sector as well. So it may well be that a next cohort into our reg lab could have an insurance tilt to it as well. The other thing that we're also looking at is the evolution of the sandbox.
Let's hold on to that, because that's going to come. There are a few lessons to that. I want to go through the lessons, and then let's talk about where we should be heading. But I want to talk about Sama's sandbox and what that currently looks like, and where you see it evolving and fostering local fintech and fostering the investment and the industry collaboration. What are you doing there?
Sure. I mean, sandbox, as a definition, it's a framework, regulatory framework, that allows financial institutions and banks / fintechs to test out products and services that don't necessarily comply with current regulation, in order to allow them to test out these products or services in it's a live environment, but within borders. And those borders help SAMA control or try to decrease the risk associated with that particular service or product. As of now, we have approximately 19 banks and fintechs within the sandbox, and we expect to have that's what a soft opening, to be fair. And we expect our first cohort to be either in January or February. That's our first cohort, and depending on that, we've received a lot of demand from the market to start running in Sandbox. I think our approach is good. It's risk averse. However, at the same time, we don't want to limit the creativity of those fintech companies in particular, because if you don't test it out, how are you going to know? You know what I mean? Well,
you don't want to test it in the market, and you don't want to test it on customers until you can prove that the risk has been mitigated.
Exactly. That's why there's certain tools to govern that type of relationship.
Precisely, and that actually then leads to the notion of how do you set up a sandbox environment, or how do you approach the market with this? How is Dubai looking at this?
Just if I can comment on something that Nick had said. I think it's important to clarify that the term sandbox is generic, and if we think of sandbox as more, it's an opportunity. Because in ADGM, they look at it a little bit differently. As Nick mentioned, it's a safe harbor. You won't breach any rules during the period. For our sandbox in a DIFC, it's a financial service license, so you can breach rules while you're in our sandbox. What we do is we give you some flexibility to operate. We give you some flexibility from our rules, so that if you do violate a rule, it's not a significant violation, and we reduce the impact. So we don't allow you to do too much business. So it's a trade-off. We'll let you operate. We'll give you some flexibility, but then you give back in that we don't let you do too much. until we're comfortable that you have the controls in place to meet the regulations. So it's a bit of a difference from one sandbox to the other.
It's the monopoly thing of pass go, but you don't collect $200 if you violate the regulation.
Correct. Yeah.
I mean, but that's just it. You're right, and I think there is a little bit of a misunderstanding what the sandbox looks like. It used to be that we had clean data sets that we could test and we could prove the model. Then it evolved into, let's actually make this live in the market, and we'll limit the segmentation or this customer set that you can play with. And it's actually starting to expand off of that. That actually leads us a bit more into some of the lessons that have come out of the sandbox. Now we're ready for this. I think you were raring to go, Nick. But it's that what are some of the significant lessons that have come out? And Faisal, maybe we should actually start with you, because what were the lessons that you learned from other markets that you decided to deploy, and how you framed out Sama's sandbox?
Sure. I mean, part of what we did is that we benchmarked against other countries and other sandboxes of what they're doing, and then we tailored it to the market here. So in principle, it's all the same, except for, let's say, certain minor details or major details when it comes to the law and certain areas. The demand for sandbox is very high. However, whenever you want to apply it to the sandbox, I mean, you should be prepared from, let's say, an entity to have a proper entity. You should be prepared as in to understand the concept in order to explain the concept to the regulator, because the regulator does not know every single technology that's out there. It's the job of the fintech company that's going to provide the product or service to explain it to the regulator and to try to reach a middle ground in order for them to work together. We usually have an open dialogue, because we know that some of these fintech people don't have a background in banking, don't have a background in AML, don't have a background in finance in particular. We've seen a lot, let's say, from the IT sector coming into the banking sector, coming into the fintech sector as well, and we've been guiding them. I mean, on unofficial guidance, of course, on how to approach SAMA or how to approach this particular idea, because there are some risks that cannot be mitigated. Bottom line, but those that can be mitigated will find, let's say, a solution in order to move forward with it. And with everything else, there's a learning curve associated with any transaction that you do in your daily life. And to the region, Sandbox is pretty new compared to, let's say, to Singapore or the FCA. And it's a learning process on our behalf, on the behalf of the fintech, let's say, company itself.
Absolutely fair. And you touched on very briefly a point that I think we'll circle back to, but it prompts that question of regulator educating fintech versus fintech explaining to regulator, and the dynamic of that particular relationship. Earlier, it was cast about that it was not particularly sympathetic, or that the regulator is set up as a barrier to entry to a market, that getting a license is actually, it's your job not to give them a license, or you're sitting on your hands and not reviewing and speeding the process through. I want to make sure we touch on that, because Ken in particular, you had a point. So let's do a little deviation and we'll get back to lessons. But about the fintech being able to explain the proposition, understanding the risks, and then moving forward with the licensing process, give us a perspective of how you actually see that dynamic, what it in reality is versus what we perceive it to be.
Yeah, so traditionally, with large institutions, take banks for example, the banks will go to the regulator. They have their teams of lawyers, they've looked at the regulations, they've identified what new business activity they want to conduct, how that is consistent with the rules and regs, where it's not, and they can offer to us whether it needs to be an update to the rules or how that works. The fintechs come to us, and the sandbox is designed to accommodate this to a point. The fintechs come in and they tell us, I have an idea, what do I need to do? Can I do it? Which rules apply to me? Which rules don't? And the sandbox is designed to offer some engagement where, I hesitate to use the word consulting, but that's what we end up doing as a regulator. We end up consulting a bit. And what we found is that we end up consulting too much. So a regulator approaches us, they want to enter the sandbox, they have a brand new invention, they're going to disrupt the industry, and they begin to ask some questions. How does this apply? And as we begin to advise them on the rules that apply, we begin to learn that effectively, to put the simplest, they have no idea what they're doing. They have no idea what it means to be regulated. They have no idea of the resources that they're going to need to meet the rules. There has been little to no homework done before they arrive. Now I say the sandbox is there to help them. It wasn't designed to do the work for them. And you heard today a number of the speakers talk about the fintechs are now, they're partnering up with the incumbent institutions. And they're doing that largely because they're recognizing that being regulated is more serious business than they thought it was. And from the regulator's perspective, we hear often that we're the barrier to entry. We're not the barrier to entry. If we're not here, they're not going to enter at all. Your counterparties, your partners don't want to partner with a non-regulated institution that's engaging in regulated activity. Clients, if they're going to give you money, they want to know that you're regulated by a proper regulatory institution. So if we slim down our regulation too much to assist, we then jeopardize the regulatory proposition. And if our reputation is jeopardized, then there's no point in you being regulated by us. And if you're not regulated by us, then you're going to have a hard time getting clients. You're going to have a hard time getting business partners.
So there is a lesson coming out of the sandbox, which is that there is an actual burden on the technology sector to be informed about what market they're actually entering. I mean, banking, for all intents and purposes, is a natural monopoly. It is a regulated natural monopoly. It's really, really high barrier to entry. Their capital requirements, their fiduciary responsibilities, and if you're touching someone's money, as a fintech, you have to be aware of all of those obligations. So part of it is that the market itself, the technology market itself, actually needs to be better informed. And how can we put some mechanisms in place to make that relationship or that accountability relationship more equal? Nick, what are some of the other lessons that you're seeing come out of the sandbox?
Yeah, there's probably the first one I would cite is actually the reality of where sandboxes are going to go in my mind. So at the moment you have sandboxes in different jurisdictions, in different countries. Actually, what I think fintechs are looking for particularly is to be able to use their idea, their technology across multiple markets, to be able to come and speak the same language to different regulators. So I personally think, and one of the things we're doing at ADGM is really focusing on this, is to be part of more of the global sandbox. So the global financial innovation network that a number of us are involved in, I think is incredibly important, because it will enable fintechs to access markets just potentially by going through one regulator and then being able to access other sandboxes and other jurisdictions, which reduces costs. Because actually the reality is, I think someone in the last panel spoke about TransferWise, in the UK, the technology in TransferWise is applicable across the whole world. So therefore, why couldn't they come and use their technology in the UAE or wherever it may be? And we should be looking at trying to reduce some of the barriers to entry in this region and more globally for fintechs. The other angle that we're also looking and focusing on, the next stage in terms of the sandbox for us, is the digital sandbox. So one thing that we will be pushing on in 2019 and launching in 2019 is the ADGM Digital Sandbox, where we will host the technology. The regulator and the financial center will host the platform, if you like, for fintechs to come and try out their technology, and for some of the incumbents potentially to test whether this technology could offer some kind of solution for a problem or a concept that they have. So the next phase for us is very much, yes, incumbents coming to disrupt the market, absolutely, but also the fintechs coming in to help enhance the incumbents who are already in the market with some problems that they may already have. And we've already seen it in a number of the big financial institutions in Abu Dhabi, where the fintechs are partnering with them now to find solutions to reduce costs to problems that they may have in their day-to-day operation. And the digital sandbox will be a way to be able to do that, which ADGM and the FSRA will host. So I would say for me, what I've learned from the sandbox are those two things. One, that collaboration is absolutely key. Collaboration across regulators, across the three of us here, and regulators around the world are all members of GFIN, but also moving the sandbox now into to a space where potentially we as regulators can offer a platform for technology to be tested, and we can see into that platform as well. We can see how it works, but also gives benefit to the incumbents too.
So one of the notions of actually the real-time oversight, the real understanding of the technology, turning into technology users versus a reviewer. I mean, there's an example that you shared earlier with me, Ken, about the OCC and what they're doing in terms of actually playing with the technology. But being able to have real insight and actively using this moves us into supervisory technology, regulation and supervision technology, and the deployment thereof by the regulators themselves. Give us a snapshot into what the OCC is doing that kind of alludes to what Nick has been talking about of being a consumer of the technology yourselves.
Yeah. So currently the US OCC, they've developed an internal blockchain, and they're using it amongst their staff. So staff can pay for things in the cafeteria and a variety of other things in the office using a Lincoln token, they call it, Lincoln coin. And the reason they did this was so that they could watch what data is going across the chain when they're doing transactions, and they created their own regulators node, and they want to watch and see what can they monitor through that node. We're waiting to hear what the outcome of that test is, and hoping to leverage off that ourselves. We don't have any plans to create our own blockchain because it's quite an expensive undertaking to do, but this is an example where one regulator is doing something and the rest of us can leverage off of that experience. Internally, we are looking to deploy our own AI and machine learning programs for better data management, so we'll understand how we can use that versus how firms are using it. Between doing that, between blockchain, what ADGM is doing with its hosting its platform, with all of us talking, the GFIN is a platform for us to do that. We are learning the types of things that you're developing, and that's how we're developing our knowledge of it. It doesn't happen overnight, unfortunately, as much as many of us would like it to happen, but it's part of the measured approach that we take to understanding the technologies, which is why it takes us a little bit of time before we say, go ahead and do what you want to do. We need to understand the uses a little bit first.
Well, take heart, because there are still institutions that are doing their initial digital transformation that have been taking years. So adoption is always going to be a measured step. But for regulators to actually make a foray into that and be the users of that, they actually deploy it, that has been a big shift, because right now we're looking at that moment where we're tipping into real-time regulation. Not reactive, retroactive regulation, but forward-thinking, progressive, and real-time right now. And that's a big shift for this industry. And that actually leads us into some of those questions around how do we do that as regulators? How do we actually close the gap that gets us to real-time? What are some of the supervisory technologies you're looking at, or what are some of the changes in terms of regulatory frameworks that allow that? Generally speaking, not necessarily from your institution's point of view, but what are you seeing that's sort of closing that gap to where not only are we able to evaluate the fintechs and understand the risk impact to the market, not only are we able to offer an environment for incumbents and fintechs to collaborate and test, and we're doing it in a digital platform where we host the technology ourselves that allows us that insight, that real-time insight into what they're doing. It comes down to having that node observation on the blockchain system, for example. But where are we also going so that we can actually be responsive to things right now? And understanding the potential impact of a launch to market that, even though we've tested, we can then react and refine and fine-tune some of those regulatory frameworks that we need to put in place to safeguard the system's stability. And that's the one thing that I go back to this as an economist, because I'll harp on about economics forever. Systemic risk and managing that, when we think about disruption, it's not just about doing something a little bit differently or having a user experience a little bit differently. It's actually about the impact to individuals far flung from you, 6 degrees of separation, that we have to be worried about. Their capital requirements, their monetary policy requirements. There are a number of different challenges that we have to think about in a grander meta-level picture, that when we talk about my day-to-day banking desires and disruption, we don't realize that they have an extended rippled impact on the rest of the world. And I think we need to put that hat back on and understand that this is not done in isolation. This is not done just to do something different. This is about maintaining the privilege and opportunity to bank at every level, enhancing that over the course of time, but actually ensuring that the system doesn't break down, because heaven forbid that 208 happens tomorrow again, or it happens every 2 years instead of every 20, 25 years as a reset for the economy, for the global economy. And the diatribe's it's over now. We'll get back to the questions. But how do we start looking at that to do it real time so that we can actually manage risk in real time? What are some of the things that we should be considering as technology solutions, or how should we be adopting a mindset for that from a regulatory perspective? You've been nodding.
I've been hiding, but it's okay, I'll answer that.
You've been nodding. I think you might agree with me. What do you think, Faiza?
Well, honestly, we do have an open relationship with these fintech companies, so we're very close to them. We know what they're doing, and we know how they're doing it. We even have a closer relationship than we have with our financial institutions that are under our umbrella. That way, I mean, it's a good approach, but it's not optimal, honestly, because you don't know the implication of that certain technology. But we try to close the gaps as much as we can, I mean, on a manual basis rather than automating the process. That's what we're doing currently. Maybe in the future with, let's say, emerging technologies, it will give us the ability to, let's say, proactively monitor such services and products.
Yeah, Nick, are you taking a look at technology enabling more real-time oversight?
Yeah, absolutely. There's probably two examples I can give where we're looking at. Firstly, we've been experimenting with digitizing our rulebook. And this might sound a little bit strange, but obviously if you were to stack up most regulators' rulebooks, they're probably about that high. And when changes are made and we put new policies in as regulators, different parts of that rulebook change, and obviously for the firms that we authorize and regulate, they have to change their policies and processes. So we're trying to find a way of digitizing the rulebook. So where we make a change or others make a change to a rule or a regulation, it can feed automatically through to the entity, to its systems and processes and procedures. So we've tried a little bit of technology where we looked at changing some of the FATF requirements. We changed one part of the FATF requirements would have an impact on our AML rulebook. And what we used was machine learning and AI particularly to trigger that change in our rulebook to automatically update our rulebook, which will then feed in. And the next stage of that experiment is we're partnering with one of the banks that is up and running in ADGM at the moment on the AML side, that they can automatically get that update into their own processes, their own compliance manuals, all those other things, without having to have teams of people rewriting them, briefing staff, and doing all those things that normally happen. So that's one example, and something that sounds a little bit boring in a way, but actually removes a huge amount of cost and brings a lot more certainty to the compliance process, which can only be a good thing. The other thing is that we're doing, and you may have heard that we're one of the first regulators in the world to come up with a regime for crypto assets. So we launched our framework back in the summer. We're at the point at the moment of dealing with the applications to that framework. We expect to license our first crypto asset players probably before the first half of 2019. One of the things that we were very clear about, though, is that we would need a market monitoring tool to enable us as supervisors of those exchanges and other players in that space to understand things like AML and all of those other things. And I know that's a real, quite a controversial point with crypto assets. So we've been working with some of the advanced technology providers to give us an insight and traceability in terms of the crypto assets that could be exchanged on some of the exchanges that may be coming to ADGM. And it is I've seen some of the technologies, absolutely fascinating, where you can go through a wallet and track a crypto asset from where it was mined to each time it has been spent on either the web or the dark web, in which site it was spent, who held it, where it went to. It is absolutely slightly frightening, but also absolutely fascinating as well. So that's one of the things that we're looking to implement in terms of a market monitoring tool and to help beef up our AML and KYC when it comes to crypto assets.
This is, I mean, I've always said there's no privacy in provenance for assets no matter where you are. So we've always been able to trace any particular crypto asset, not necessarily know who holds it, but we can always monitor that activity. So quite interesting that we're moving into that particular space. It's no longer traditional assets. And it is a highly controversial topic about how we go forward with this. How are some of the conversations going amongst the global regulators around how to actually examine this? Should we actually be looking at crypto assets? Is this something that how do we actually respond to it? Because it's now become a reality, and it's sort of where we're moving. And I know not every particular jurisdiction is interested in it because it is highly risky. But we're starting to think about those conversations. What are some of the points that we as a public should actually understand around crypto asset regulation? And not necessarily from a policy perspective or a particular stance, but what are some of the concerns and what are some of the trends that we should be thinking about as a public understanding that? Because we're playing with digital assets no matter what we're doing, right? Everything that we do in banking now is digital, it's an asset, the data is an asset. So what should we be thinking about in terms of that? Because that is going to be sandbox next. Whether or not we have a live market, most jurisdictions are going to have to play with that from a central bank perspective or from a securitized perspective, securities being issued in some way, shape, or form in a digital tokenized format. Ken, we've had a really brief discussion about what are some of those things that you're thinking about and considering?
So if we just focus on the digital asset aspect of it, set aside the cryptocurrency being the Bitcoin, set that aside for a moment.
Not crypto, not cryptocurrency, but asset, fundamentally
assets.
different thing.
Yeah. So the couple of the issues that we deal with the digital assets are two. One, settlement, and second is custody. So you don't have the traditional settlement aspect anymore. We're having a clearing firm necessarily with the blockchain. The blockchain's doing that. So from a regulatory perspective, we're looking at that and asking, well, what exactly does that mean? We know it's different, but we don't entirely know what that means exactly as far as rights and obligations that are assigned at that settlement phase. Then when it comes to custody, you often hear when a firm comes to us and they want to tokenize assets, they say self-custody. Well, when you say self-custody to a regulator, that's a bit of a frightening thing. In particular, our rules around custody, we require the custodian to be regulated. So if one of our institutions wants to outsource to another custodian, it has to be a financial services regulated custodian. What are the reasons we require that? There are reasons, and we have to ask why, because with the blockchain, you don't have a traditional custodian anymore. The blockchain acts as a custodian. And then there's this self-custody. Well, what's being self-custodied? Is it the code on the blockchain? Is it just the key that accesses the blockchain? Where do the rights and obligations sit? Where they would traditionally sit with a regulated custodian, where do they sit now? So I don't know the answers to these questions, but these are the questions that we're grappling with right now when it's fantastic and we don't have an issue with tokenizing assets. It's a fantastic model and we fully support that. The underlying financial service activity hasn't changed. There's still a security being offered, there's an asset. But it's some of the activity around it, it's the safety and security of the asset, which is our primary concern, and those are some of the questions. Till we answer those, where you'll see it, we're moving a bit slowly in that direction. We're moving there, but it's difficult in answering those, the custody and settlement questions.
Well, one of the experiments that's actually running with ADGM is that you've set up crypto asset exchange regulatory policy. And I actually spent the time to read it in September, because what else is one going to do on a weekend night? But what was interesting is this reflects a traditional exchange regulatory framework. In fact, it referred back to the existing exchange framework. So what are some of the things that we're doing in terms of here's how we've done it traditionally? We're just doing a different format in terms of securitizing the asset. And we're doing it on a token space rather than a bond or a paper issuance of something. What are we monitoring and what are we expecting to learn is a difference between how we currently regulate an exchange to how we will be regulating exchanges with a crypto asset backing?
Yeah, it's a really good question. We're learning, in all honesty, we're learning this as we go through we've issued the policy and we're in the process of licensing. We started with the principle, a lot of regulators and regulatory authorities didn't want to touch crypto assets. We started from a different end of the spectrum, which is to say, look, we believe they should be regulated and they should be regulated fully, not just for AML and KYC, which is done in a number of jurisdictions, but actually more broadly. And that's why when we looked at the market, we thought the principles that are currently apply, the regulations that are there for exchanges, for disclosure, for custody, for KYC, for AML, for CTF, all apply. Those principles apply just for crypto assets as they do for any other type of assets. They're just hosted in a different environment. And that's why we effectively use the principles from our existing exchanges policy, our existing AML, KYC, but look to update those for the 21st century and for those crypto assets. In terms of what we're going to be looking at particularly, we have a number of, I've got a presentation I won't give you now, but we look at a number of different risk categories when it comes to crypto assets. One of them that I think we will be focusing on more maybe than we focused on with other sectors is technology governance, because it's absolutely key in the crypto asset space. And it's probably, in all honesty, something that traditional regulators, I know with my old hat on from the UK, we weren't great at. We should be good at things like capital and liquidity and conduct, but actually as regulators, we weren't good at understanding that technology. And actually as regulators, we really do need to get to understand that technology in quite a lot of details, because it's going to be absolutely critical. So for me, it's about understanding that technology governance. Does the board of the firm that's operating this really understand it? Does the management understand it? How do they check that they understand it? Back to things like custody as well. I mean, you know, the rules of custody are there, but it is a totally different animal with a crypto asset custodian. One of the really interesting things that we've noticed in the first few months of our regime going live is that some of the players that are coming to us, yeah, absolutely, they're the new crypto asset players, the names you would have heard of previously. But what we're also getting a lot of interest is from established global banks and custodians who have realized that they need to be in this space. And they want to come and do joint ventures or other things with some of those new players so that they can learn about this technology as well. So it's not just the regulators learning, but it's also the existing financial institutions who maybe don't really operate in this space, who really are on a mission to really try to understand how this market works. Because I think they believe if they don't, there could be a problem for them in 5 or 10 years' time.
So we have a couple of minutes before we transition into the next session. Are there any questions from the audience that we would like to take? Or have we answered everything you've ever wanted to know about regulatory sandboxes and where we're going? Oh, look, masterclass. Well done, gentlemen. Then in that case, I want to end with a final question. What is the most exciting thing that you have actually experienced coming out of the sandboxes that you've each participated in? And where do you want to see more of that activity and enthusiasm coming from? What's the thing that made you most excited? Let's put it this way, what's the biggest lesson that you've learned in having overseen it, having set it up, having experienced some of the things coming out of it? What makes you personally excited? Let's reverse the order. Okay. Ken, bring it on.
Well, what we've seen so far, probably the most exciting thing I think is the KYC distributed ledger platforms. And it didn't go through our sandbox, but we are working on a proof of concept with a vendor that's putting together. And I say working on a proof of concept, we're engaging with them, we're monitoring what they're doing, because we don't regulate that type of activity. So it hasn't gone through the sandbox, but through this process of the Fintech program, that's probably the most exciting one we've seen. And we're interested to see how far this can go. Right now it's operating in Dubai. Does it go to all of UAE? Does it become a regional? And we've had some discussions before this panel. How big can these platforms get? And that's going to streamline the onboarding process for all institutions potentially, which is probably the #1 complaint with institutions. It takes so long to onboard a client. So if these things can develop well enough, I think that's a big jump forward with probably the least amount of controversy potentially.
And the global KYC sanction sort of approach is really fantastic to have that sort of standardized. Faisal, what has been the pleasure that you've had in setting up the sandbox?
Sure. I mean, the creativity that came with, let's say, the fintech companies that applied into Sandbox, and the excitement that's associated with that creativity and the dedication from their side really gives you the push that to see such a, you're doing a good thing to better the market overall. And that gives me, let's say, a good feeling that what I'm doing is a good thing overall.
It's actually, there's always the balance of people and technology.
Absolutely.
And it is the people side that does bring the most satisfaction.
Absolutely.
I agree with you on that. Agree with you on that.
Thanks.
Nick.
Yeah, I totally agree with Faisal's comment just a second ago. Seeing that energy, that innovation is fascinating, and gives you a lot of faith in the human race as well, to innovate and come up with new technology. I think one of the things that I've taken away, one of the really wow moments, was one of our tokenization, our RegLab participants, Sandbox participants, that was focusing on tokenization of any asset. And for me, that was a real eye-opener, that any asset can be tokenized and can be then exchanged and traded, adding liquidity to markets that never existed previously. And for me, that was absolutely, to do that in a safe and trusted way was absolutely fascinating. And I think if they're successful, could bring real and significant changes to many types of asset classes around the world.
We'll talk about that later. It's been one of my favorite topics. Gentlemen, thank you very much. I want to, in summary, kind of highlight some of those lessons. It's a global necessity that we actually take a look at how regulation cross-jurisdiction works. I'm most excited for the upcoming tech sprint the Global Sandbox is putting together that extends AML KYC into fraud detection. But that it's not necessarily offering just safe harbor for experimentation, but actually making sure that we do experimentation on the impact to the market, but still facilitating new entrants into the market, fintechs, making sure that the system is robust, protected, but still able to adopt and innovate on business model, not just technology, and that you're putting together a framework that allows that as quickly as possible. And that's what I don't think people understand, that this is actually a fundamentally quick process. Right now, the sandboxing is revolutionary in terms of how quickly we can deliver things to market in a regulated way. And that the most important thing is actually how we participate at a human level. Thank you very much. Thank you for being with us this afternoon. It's been a pleasure.
Thank you.
Thank you, our speakers.